Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. Today, on the data front, the US Personal Consumption Expenditure Price Index (PCE) inflation takes center stage. Analysts hope for another downtick in US PCE at a 2.5%, which could, barring surprises, confirm a Fed rate cut in September. We look at this metric and some of the latest data releases. Yesterday, it looked like the rotation theme in the markets was back. Small caps are up. Russell 2000 up 1.26%. The Nasdaq down marginally, minus 0.93%. S&P also minus 0.51%. Dow up 0.2%. As we get more earnings coming in, so far with about a third of the index already released, S&P 500 earnings per share is up 10%. Also today, this time in Singapore, the benchmark Straits Times stock index fell 0.2% after the central bank held its monetary policy parameters for a fifth consecutive quarter. The Monetary Authority of Singapore said the economy is expected to strengthen over the rest of 2024, adding that core inflation should fall to about 2% in 2025. And in America, the American Securities and Exchange Commission have approved the first batch of exchange-traded funds that are permitted to invest in Ether, the world's second biggest cryptocurrency. It's an alternative to Bitcoin, which saw its first SEC-approved ETFs launched earlier this year. And some tech news. Apple's iPhone continues to lose ground to other domestic models in China. Although China's smartphone shipments grew 8.9% year over year to 71.6 million units, Apple saw a 3.1% decline according to latest data. And in Paris, the Summer Olympics kicks off today. We look at the economics of what some are calling the greatest show on earth. And in Nigeria, President Tinubu is appealing to protesters against bad governance and economic hardship, planning to go to the streets not to resort to violence and turn Nigeria into a domestic crisis zone. The Paris Olympics opening ceremony will take place later today, running until the closing ceremony on Sunday, August 11th. They say it promises to be the greatest show on earth, as between 2.3 and 3.1 million visitors with games tickets are expected to visit Paris during the games. An estimated 2.6 billion euros will be spent by tourists traveling to Paris, but total cost of the Paris Games has been widely reported to be around 10 billion euros. Paris hopes hosting will stimulate development of infrastructure, draw tourism dollars, and boost employment. A recent independent study also revealed Olympic Games 2024 are economically beneficial and set to generate between 6.7 and 11.1 billion euros in net economic benefits in the Paris region, with an intermediate scenario projecting 8.9 billion euros in net economic impact. According to the study, most of the 7 billion euros in private funding for the 2024 Games comes from media rights, sponsorship, and ticketing, but also private investment in long-term infrastructure projects, and it includes an IOC contribution of $1.7 billion in cash and services. Public funding amounts to about 3 billion euros and mainly covers projects that will address long-term needs of local communities. The broadcast rights are generally the most lucrative piece of the pie, and broadcasters who pay for the rights hope to sell more in advertising. Companies also pay huge sums for the rights to use the Olympic rings in their advertisements. However, the Olympics have almost never been profitable. Still, it's a good show to show that you are a serious player on the world stage, and for Paris, it can be a massive boost for tourism. Compared to where it was in 2020, Apple has a larger overall market share in China than what we had in 2020. That was 8.3 3%. That was Q3 2020. Compare that with 13.6% today. But it is losing ground to domestic competition. Apple's market share fell despite aggressive discounting of iPhone models during the quarter, and we now see all local companies as the top 5 sellers in China ahead of Apple iPhones. Xiaomi's smartphone sales benefited from marketing buzz around the launch of its first electric car, the SU7. Vivo, Oppo, and Honor are the other Chinese brands in the top 5. Huawei also launched its flagship Mate 60 smartphone series in September last year. Apple hopes new AI features will help its differentiation in Asia's more competitive terrain. Apple unveiled Apple Intelligence in June, also partnering with OpenAI to give Apple users free access to ChatGPT, larger AI models capabilities. If China-US trade tensions get worse in 2025, one can expect more barriers to be erected to stall penetration of US players like Apple. Apple looks unperturbed, having recently regained its number 1 position as the US's most valuable company ahead of Microsoft and Nvidia. The US economy grew 2.8% in the second quarter, higher than 2% expected and 1.4% in the first quarter, further dispelling notions of a possible hard landing or recession. The build-up of inventories, however, added 0.8 percentage points to GDP growth in the quarter, following a decline in the first 3 months of 2024. So the higher GDP we are seeing may not be as reflective of consumer demand. Yesterday, US citizens that applied for unemployment insurance benefits, that's jobless claims, increased by 235,000 in the week ending July 20, below initial estimates of 238,000 and less than previous weekly gain of 245,000. Also, in US, durable goods orders contracted sharply in June, a 6.6% decline compared to 0.3% expected. Also, the worst durable goods orders report since February. Unlike the Consumer Price Index, which measures average prices of various consumer goods and services, Personal Consumption Expenditure Index measures expenditures based on how much money people spend on everyday purchases and includes a broader range of goods and services than the CPI. The US Federal Reserve tracks PCE as the key inflation metric in its summary of projections. The June summary of projections has the 2024 median PCE as 2.6% and core PCE as 2.8%. The long-run target for inflation is for the PCE index to increase at an annual rate of 2% over time. Today, economists see a 0.1% month-on-month rise in the PCE price index in June after no change in May, and monthly gains of 0.3% in February, March, and April. Year-over-year increase in the PCE index is projected to have slowed to 2.4% in June from 2.6% in May. The core PCE index, which excludes food and energy components, is seen as rising less than 0.2% month-on-month in June and annually by 2.5% less than 2.6% year-on-year in the previous month. A surprise today will jolt probabilities around a September Federal Reserve Bank rate cut. Next, on oil prices, we see several factors impacting the demand-supply dynamic. First is the demand from China, which is so far sluggish. Delayed rate cuts also means a firmer dollar, which hurts demand for oil. Better than expected economic growth, however, applies higher demand from the world's largest energy consumer, that's the US, which helps to keep prices slightly higher. Yesterday, Goldman Sachs analysts said that whoever wins the US presidential election in November will have limited tools to significantly boost oil supply next year, adding that strategic petroleum reserve stocks are low and regulatory easing. Yesterday, Goldman Sachs analysts said that whoever wins the US presidential election in November will have limited tools to significantly boost oil supply next year, adding that strategic petroleum reserve stocks are low and regulatory easing of supply may only significantly boost US supply in the long term. Goldman Sachs expects demand to be even weaker next year, hitting prices more noticeably, especially if tariffs go up, which will weigh on economic activity worldwide. Prices could be even lower if the Federal Reserve delays interest rate cuts into 2025 due to a higher core inflation rate. According to Rystad Energy, crude prices in the next few days will largely hinge on economic news from China, the likelihood of US rate cuts, and how negotiations progress in the Middle East. A reversal of much of the work done under the Biden administration for climate change, stalling progress of the Inflation Reduction Act, which incentivizes investment in renewable energy and clean tech, all will have implications. We could also see an end to restrictions on oil and gas leases, facilitating expansion of the fossil fuels industry, depending on who resides at the White House come next year. Brent crude, as we speak, over $82, slightly up, $82.48, up 0.13%. President Bola Tinubu has warned organizers of the August 1 nationwide protests against proceeding, as we do not want to turn Nigeria into Sudan, he says. President Tinubu said protests fueled by anger and hate easily degenerate into violence and set the country backwards. He added that the reworking of the social welfare scheme is in progress, that's in Nigeria, and he intends to make the impact more felt and closer to the people. There's always a place for peaceful protest and drawing more attention to lapses in governance and the social plight of the population. My take has always been that this government inherited a very difficult context with strong embedded interests, forcing compromises and slowing down the pace of change. Even where there are strong declarations of intent, weak institutions that need overhaul, and in some cases completely reinvented, means implementation will be slow, if not completely stunted. The government may also have underestimated the challenge before them. The people may be more impatient, and rightly so. And communication to carry people along, exposing proposals to more discussion and getting more inputs are all areas for improvement. My sense is that the tone is right and the direction of reform has already been applauded as broadly well articulated. Implementation and courage to sustain an initially strong momentum are all areas that are being watched. 3 areas calling for immediate acceleration of reform. First, people welfare issues. Second, infrastructure. Third is plugging fiscal leakages from bloated structures, corruption, and low productivity. And of course, we can't forget the issues around security. None of these will be addressed by violence or massive disruption that only looks like set to birth a different chaos. As we close, we look at Asian markets mostly rebounding after yesterday's sell-off. Traders also digesting July inflation data, that's from Japan, which slowed slightly to 2.2% in July from 2.3% in May, while core inflation rate, which strips out prices of fresh food, remained unchanged at 2.2%, in line with expectations. Looking at indices, Asian indices as we speak, Nikkei 225, that's the Japanese index, down 0.53%. Hang Seng, that's the Hong Kong index, up 0.13%. The Shanghai Composite, the Chinese index, up 0.14%. Shenzhen also up 1.45%. The South Korean Kospi is up 0.78%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.